All right, so today's tidbit, Tuesday tidbit, is what is a jumbo loan? So every year, FHFA, which is Federal Housing Finance Agency, they are the government entity that monitors Fannie Mae and Freddie Mac. Fannie Mae and Freddie Mac are the government-sponsored enterprises behind mortgages. So FHFA is the umbrella that Fannie Mae and Freddie Mac kind of fall under. So every year around Thanksgiving, FHFA will release updated loan limits for the entire country. They are national government sponsored enterprises, and therefore they handle the loan limits for the entirety of the country. So every year they look at what's going on in the market, how much have houses appreciated, and they will establish a new base loan limit. That's called the conforming loan limit. The conforming loan limit is the max loan you can get in the entire US while still having to be backed up by the government. Okay. Now, that has some flaws to it, which is look, not all areas are created equal in the country. I mean, a house in Texas is going to probably be less expensive than a house in New York City. Obviously, it depends on where, but generally you get the idea, right? New York City, LA, San Francisco, Boulder, Colorado, Denver, Colorado are all high cost areas. So the government says, look, we have our base loan limit in 2023, that's 726,200. And then the government says, look, we will lend more money in higher cost areas, but it's really going to depend on the county. So for Boulder County in 2023, that is 856, 750. In Denver County, Arapahoe County, Jefferson County, Adams County, Broomfield County, less expensive, they will do 787, 750. Now, the catch is it's going to be a slightly higher interest rate. So conforming or lower has the best interest rates. Super conforming or high balance or high cost loans are above 726,200 up to that county loan limit. That's what we call the, again, super conforming high balance second tier. Those are going to be a slightly higher interest rate. Now, anything above those loan limits is officially going to be a jumbo loan. Jumbo loans mean they are above and beyond what the government will back. It is now the institution, so Elevation's credit union in this case, to lend out their own money. It's what we call a portfolio loan. It's no longer backed by Fannie Mae or Freddie Mac. It is now backed by the institution on their own. I've joked before that lenders, banks, credit unions are very quick to lend out the government's money and a little bit slower to lend out their own. So when you get in jumbo territory, again, above that kind of high balance loan limit or that super conforming loan limit, the rates are typically going to be a little bit higher. The down payment requirement is typically going to be higher. Loan terms may differ. Loan costs may differ. Everything is going to be slightly different. So guidelines are definitely going to be different. So jumbo loans simply have to do with the amount that you are receiving. Is it or is it not above that loan limit? Every institution is going to view those jumbo loans slightly different, have different guidelines, rates, costs, everything associated with it. So that's what a jumbo loan is, and that's how it applies to you. So thanks. Bye.